Hey everyone, me Kevin here. In this video, we're going to talk about what Jerome Powell just said, and we've got some updates on taper timeframes. Let's get right into this. I do want to make a note though, when Jerome Powell talks, there are usually good opportunities to trade stocks. I'm going to give you a very quick example straight from the trades that I post in my Stocks and Psychology of Money group, and I'm going to show it to you live. It's right here. I bought a $50,000 January call this morning at 8:26 a.m. for an average of 200 quantity. And I closed that position up about $14,400. There we go, get into this one here. Here's that closing alert just about 2.5 hours later, up $14,600. Market basically bottomed with Jerome talking and is now recovering. Good J Powell swing, 30% in 2 hours. I'm not going to not take 10Ds on that one. So obviously I think ERJ has lots of potential. I think it's a great company and I hope it runs. It's a company I want to hold long term, but I do not right now because I think there could still be some downside, especially as we get through this crazy fear supply chain winter. All right, folks. So let's talk about Jerome Powell. By the way, if you want these kinds of alerts, make sure to check out the program on building your wealth, the Stocks and Psychology of Money group. Link down below. You pay once and you get lifetime access to the lectures and then the buy-sell alerts. Okay, Jerome Powell told us that supply chain pressures will, quote, likely last well into next year. Quote, well into next year. My estimate that well into next year is something like mid-August to September. That's about 70% through the year. I think well into would imply about 70% through, certainly more than 50% through. So my expectation here is that Jerome Powell is essentially telling us we are going to be dealing with these pressures for quite a while. Now, he does also say that, quote, overall inflation is running well above our target. It's worth noting, though, that that's not necessarily a red flag, which might explain why Treasury yields actually came down after Jerome Powell finished talking. Because Jerome Powell has regularly said, hey, look, we want inflation to run above our long-run target, so that way in average inflation will be around 2.5%. So this is all part of their policy on flexible average inflation targeting. Again, that stands for FATE. He does mention that supply constraints are pushing inflation higher and it's difficult to predict when these bottlenecks will ease. He did seem a little bit more concerned than he has in the past about inflation, so he's kind of really walking down that road of U-turning on temporary inflation, and I'm happy that he is because it's him adjusting to reality. I've had to adjust to that reality as well. I did call for a market rally at in Q4 here. So far, the market has been doing very, very well in Q4 and kind of actually brushing off a lot of these supply chain and inflation fears, with the exception, of course, once you get revenues that start falling, like over at Snapchat. Snapchat revenues get crushed on advertising revenue because of the Apple modifications to how much data individuals can glean off of Apple users, and that all of a sudden leads advertisements to be less effective, which is very important to know because every $100 you spend on ads, your goal is to try to create $200. But if all of a sudden you can't target as well, and now you're spending $100 and you're only getting $150, you might look for other platforms to advertise on, and this could potentially be why you're seeing platforms like Snapchat and Google, any sort of broad-based targeted ads falling, but companies like Etsy actually doing well. In my opinion, this is potentially because people on Etsy have a buyer profile that Etsy can glean data from. They don't rely on the app itself. They can get this data as a customer in terms of what they're checking out on, what they're viewing, and so on and so forth. So I think those integrated platforms do well at a time like this, when more broad-based advertising does poorly. So big bull on Etsy. You know, this is one of my top 5 positions. So now, obviously, Jerome Powell goes on to say that he's more worried that supply chain issues have gotten worse. And these are things that we're going to pay attention to. By the way, this is another reason I'm bullish on a company like Etsy, because if we have issues getting Christmas gifts, people might be more interested in buying stuff off of Etsy, where you have creators creating merchandise or whatever that may be less reliant on these broad, massive supply chains and container ships. Inflation pressures, he believes, will decrease as people shift spending back to services, but supply chain constraints are likely to last longer than previously expected. He said the same is true for pressure on wages, and then that he's worried that essentially higher inflation will cause, quote, wage setters to expect unduly high rates for wages. This is basically a fancy way of saying unions demanding higher pay, which would just end up reiterating higher inflation. And this is where you get kind of the inflationary spiral, where prices go up, people demand more pay, or companies pay individuals more in order to get them as employees, to attract them. They have to pay them appropriately. But now prices are higher, and because prices are higher, the employees demand even more pay, or new employees demand even more pay. And so, but then of course that increases the costs of goods that you're producing, so you have to increase the price of goods, which then reiterates this sort of cycle or spiral going up. It's the opposite of the deflationary spiral. Worth noting, a lot of folks potentially not being properly counted in the jobs data as people move from working for companies to potentially working for themselves, not showing up properly in this jobs data, which I don't think the government's really good at counting jobs data appropriately anyway. And ultimately, we're seeing a lot of two-income households turn into one-income households thanks to increased wealth, earlier retirements, because retirements accounts have all done very, very well over the last 18 months. Real estate has gone up substantially, so a lot less potential pressure to have two incomes in a household. So we're seeing a lot of this. And that, again, leads to a tighter labor supply. It's a problem. Now, and that's coming from me. Jerome Powell didn't talk about that, but when he talks about potentially this spiraling up of wage prices, I think these are things that could actually accelerate that spiral. So I don't think he's necessarily wrong about that, at least for the time being. We're going to be dealing with that more. He does say that if inflation were at risk of staying, obviously they would use their tools to preserve price stability. This is basically saying raise interest rates. And right now we are on track to begin the taper in November. We finally got a number, though. The New York Times got a hold of the number, and it looks like tentatively we're expecting to see a taper from $120 billion per month of bond purchases, $80 billion of treasuries, and $40 billion of mortgage-backed securities, down to $105 billion. That's roughly a 13% reduction in November, and then we would probably expect to see another maybe 13% reduction in January, and we do that maybe 8 times, and we're fully tapered by somewhere around July, August, potentially. That pace could accelerate, though, but I would say $15 billion a month probably puts us around that July timeframe for finishing the taper. So, and again, we're expecting that taper to begin, and I think the market's mostly priced in the taper. I don't think the taper is really affecting anyone anymore. If anything, this $15 billion is a slower pace than I think people were expecting. I think people were thinking we're going to see like a $30 or $40 billion boom cut really quickly, and that could have affected markets a little bit more. But yeah, you could actually see this by looking at the 10-year Treasury yields, because the 10-year Treasury yield has relatively stayed stable today around that 1.65 level. And that's a sign that the markets have priced in a lot of this Jerome Powell talk already. But we're getting insights like jobs concern, longer inflation, how long for the supply chain constraints per Jerome Powell's opinion, and when is that taper going to finish, and what pace? Are we getting a big taper, which could be a negative catalyst for the market, or a smooth taper? Right now, it looks like we're at a smooth taper. So we also have talk that maybe yields fell because Evergrande made a bond payment ahead of tomorrow's deadline, which actually bought the company another week. This was the end of their 30-day sort of delinquency period, and then they would have been in default. So they're delinquent, they would have been in default. They kicked that can down the road another week. Worth noting, though, that they've got $83 million due at the end of the month. They've got $82 million due November 6th, plus the other missed payments. They've got $254 million due December 28th. So this Evergrande crisis, I mean, that's a big number, by the way, 254. This Evergrande crisis is going to be an issue going forward here. Stock market, obviously, sensitive right now to Jerome Powell's talk overall, in my opinion, because I mean, look at this. You got like Square down 4% because, the more you have Jerome Powell talking about, hey, these supply chain issues are a bigger issue, the more companies want to and investors want to discount the potential for missed earnings up front. Now, worth noting that this morning I also did buy some Matterport. and bought Matterport right around here at this 1890 level, between 1910 and 1890. Did move up a little bit since then, but was working on buying the dip over here. Love Matterport. I'm really thinking there's a good potential that this stock will either blow up after earnings, or it's going to go back to that 15 to 16 level. So I'm not going heavy with my purchases. I'm doing little nibbles here. I like the trend that we have, the trend we've seen. We obviously got a little overextended for a moment here, but I like this trend that we're seeing. It's not perfect. I would really prefer a triple touch, so I think it's too early to really call a potential uptrend here. But if we do get back into this, certainly the sub 1637 level, that's going to be a nice channel to be buying in. And so I look forward to seeing Matterport drop another $3 before ultimately getting more expensive. Anyway, just some thoughts, but definitely enjoy nibbling on this one. So good. Well, there you have it, folks. Thank you so very much for watching this video on what the Federal Reserve just said. If you're interested in my programs, check them out. Link down below. And folks, we'll see you in the next one. Thanks again. Goodbye.